This is Mike Bonn, and this week's Money Chat is going over the difference between hard money lenders. So, as usual, if you have any questions, just put them over in the chat area, and we'll get to them after the session. This is going to go over just the difference in hard money lenders. Hard money is probably the number one source for people starting out, not only with flips, but in BRRRRs. So we just want to go through that. There's all kinds of different lenders, how to find them, where to locate them, and what one fits your needs, because everyone will have a different need, and who they actually serve. So that's what we wanted to go over. In this series, which is the first week of every month, we're going through funding flips and funding BRRRRs. So if you haven't had a chance, go back, check these videos out. They're on our YouTube channel, hardmoneymike.com. If you can, subscribe, like those things, and we'll keep it going. Our whole focus here is just helping people get to the point where real estate investing helps them be free from some of the other things, like a job or working for someone else, doing something you don't like. So that's our real goal here. We've been doing this now for over 20 years, and we've helped many people start from nothing and get to the point where they could do whatever they want, whenever they want. So we are an investor-focused lender. That's all we've done over the last 20 years. If it's hard money, if it's lending money on commercial or even just traditional loans. So our goal is to make you successful, which makes us successful. And that's our, after doing thousands and thousands of different kinds of deals, that's where we find that it works best. And that's why we're even starting to do some partnerships, just because if you win, we win, the client wins, the homes win, the community wins, everyone wins. So like I said, in this episode, we're going to go over the difference of hard money lenders, who they are, which one best fits you, not only now, but maybe in the future, or project specific, because everything's going to be a little bit different based on not only where you're at right now, but maybe even the project. Maybe you're looking at splitting land. Maybe you're looking to do a pop top instead of just a normal flip, or even a BRRRR property, because some lenders don't do BRRRRs properly either. So, and then how do you find them? So the number one thing to understand, just like real estate, just like homes, just like land, hard money lenders come in all kinds of sizes. There's small ones, there's large ones, there's ones who only focus on, larger deals, smaller deals. Some require a lot of approvals and some don't. So when you want to get into investing in understanding, or even maybe you have a hard money lender now and you're doing a different kind of project, it might just not fit in their box. I always look at this as like they're different. Like hard money is an industry, just like food service or whatever. There's different kinds of food service. You could go from fast food to a sit down. You could go from high end to low end. There's just different kinds of lenders doing different kinds of loans. Not every lender will do every loan. So you need to shop around. You need to understand what you bring to the table, because each going to look at something different. They all base their thing around real estate. But some people want good credit. Some people want a lot of experience. Some people will not go out of large communities. They will only lend in larger communities. So people in smaller towns can't get loans from them. So that's what you're looking for here, is you have to understand that each individual lender is different, and you may need a different lender for different projects and or different times as you go through the process of becoming a beginning investor all the way to where you're an experienced investor. So success will always, what you've done will always help with whatever lender you have. But the biggest thing with hard money lenders is, even hard money lenders, most of them will close faster than banks, but some will even close in days over weeks. And that's because some require appraisals, some require underwriting, some are more based on, computer-driven underwriting. So you have to put everything in. There is no relationship there. So you have to look at every hard money lender out there for specific projects, but you also need to know is like, what is their credit criteria? There's usually credit criteria, there's usually experience, and there's money into each deal. So hard money is very important because it is the one kind of money that allow you to close deals quickly. And that's where you get the best deals, when you can close quickly. We just got a property with one of our partnerships under contract last Thursday, and we're closing it tomorrow. The only reason it took us a full week is because title can't be ready. So you need to work with, and sometimes lenders that will move fast. Also, hard money lenders typically are the lender before you get into bank loans. Some is all about qualifications because banks have a lot more qualifications than hard money lenders, but it's also the speed factor. So you need lenders, and you also need to understand the hard money lenders if they close quick or if it takes time because they have to do appraisals, they have to do inspections, they have to set up escrow accounts, all that other stuff. So know your lenders, understand that each lender is different, and that you are going to really need to find the lender that fits not only you right now, but your deal too. Because like I said, there's just different lenders who want different things. They have and there's also different sizes of lenders. There's everything from your local person who's lending, just maybe an individual has some money in his IRA or has accumulated some money and lends every once in a while, to large hedge funds. More and more hedge funds are getting into the private lending, hard money lending. The only thing is they have to have criteria that they don't get out of their box that often. It's usually have to have a good credit score. You have to have so many properties that are being completed and done in the last 24 months, and money in the deals. So it just depends on what you're doing, what you're looking for. Every lender will also have probably different costs, and some of them just base it on interest and points, but a lot of them have junk fees. And what I consider junk fees is they have set up an escrow account, and then escrow, check your escrow. Some even charge you to make their payments. So if they're taking ACH out, they're going to charge you. You have to look at all of these things. We have a great tool if you want it. It's called a loan optimizer. So you could put in 3 different lenders for your project and see which one will cost you a little bit less on those deals. So number one, shop around, look around. Even us, there's certain deals, like we have a certain size we like, and there's other people like large sizes. We love being in small towns and small communities. A lot of lenders do not want to be in small communities. So not every lender is the same, and you're going to need more than one lender. And it may be even those who have been in this forever still come back to hard money because they just you typically need to close quick, or the property just does not meet someone else's criteria, or maybe they have so much money in other deals they don't have a lot of money to put into a current project. So shop around, get as many hard money lenders as you can, and that's coming from a hard money lender. You need to have diversity in your hard money lenders, and you need to find out who has the best rates for long term. Some lenders will only want to lend for 6 months. Some people will lend for 24 months. Some set up BRRRRs correctly, which means they'll lend you the maximum up front. Some always want you to put in 10 to 20% no matter what the loan to value is. Each specific deal, where you're at with your lending is very important. So you need to understand and just shop around and find the best deal for you. The easiest is word of mouth. And that's getting on bigger pockets. That's getting on your meetups. That's getting into other investors that and asking them what experience do they have with their investors. It's going out to Google and seeing who has, reviews and good reviews, and then talking to those lenders and making sure you fit into their criteria before you go out and get a deal. And then once you get a deal, make sure it fits in their guidelines and it's not something that they don't want to do or won't do, because then it'll just be frustrating to you. Because typically what happens, people either get frustrated or confused because they're running up against, like I heard that you can't, do 100% financing. That's because you're talking to the people who don't do 100% financing. Or I heard you can't do a 24-month hard money loan. That's because you haven't talked to someone who does 24-month loans. The people who can't do those will always tell you it can't be done. But there's always a lender out there for every deal. It might be land splits, it might be pop tops, it might be just regular flips or BRRRRs. So that's what we're talking about today. If you have a question, if you want to know what we do, we kind of have both. We do high loan to values. We really are focusing on BRRRR financing right now also. And we also have some long-term, like 24-month that we have a source that we could get it out there. But shop around, look around, make sure that someone can, be in the state you're in, help you find and grow into other states. If you have any questions, you can reach out to us. We have a lot of great resources on YouTube as you learn as you go. If you have a deal, like I said, just send it to us. Email us, call us, whatever. We'd be glad and happy to run through. And if we can't do it, we will give you a source that can, as long as it's an investment-friendly deal. We don't do a lot of owner-occupied, if any, owner-occupied properties. So that's it. Next time, we're going to talk about the proper two-step BRRRR funding, because we find a lot of people, we've talked to a lot of people about BRRRR. There's a lot of confusion on how you do this correctly, how you do it for as little to no money in. And it's typically because a lot of people, even on BRRRR, talk about a cash out refinance, and you never want to do that. When you're in a BRRRR, if possible, you always want to do a rate and term. We're going to go through that next, the first week of February. We're going to go through the two-step funding and show you exactly how to do it and how to do it correctly. So I want to thank you today. And as always, happy investing. Get out there, shop for some money, shop for cheaper money, shop for easier money, but just get out there and do what you need to do to make this as profitable as you can. Thanks and have a great day.